if you don't do life insurance as part of this, you'll never be wealthy. But I don't care what the White House says. Inflation is not 3%. I do not know of a better marriage of whole life cash value insurance and simple turnkey real estate. I don't know of a better marriage. There's a shortcut. I don't know it. I really don't. You know, financial freedom in 10 years or less is the shortcut. And this is what gets all these infinite bankers in trouble. What if in real estate, there were only 2 ways you could fail? And here's the other crazy thing. You have a guaranteed return in real estate. Because most people don't know that. But the guaranteed return is every single month, someone's paying the mortgage. And what is that doing? That's amortizing the debt. Yeah. And that's forcing a rate of return into it's guaranteed.
Let me play devil's advocate with you. Agree to disagree with me. But like, you're more like Dave Ramsey than we might want to admit.
Hey, so I got to sit down with a good friend of mine, Ryan Lee, and this was one of my favorite conversations to date. Ryan is full of passion, and we got to talk about life insurance, real estate, leverage. I even challenged him on a couple things. I feel like in some cases, he's more like Dave Ramsey than he thinks, and I also got to play devil's advocate is real estate as good of an asset as he thinks it is? There's so much to unpack in this clip. You're definitely going to enjoy.
Let's talk about life insurance and real estate. So we talk about you have your producer, you're keeping it, and then you're investing. And you put a really clear definition of investing versus speculating, which I appreciate. Because I think if we just say investing, people don't know what that means. So you identified in investing, which I appreciate. You have like a life insurance combination as a part of that. In some cases, not all cases. I'm wondering if you can explain why life insurance, and then how you use life insurance and other activities. And I just feel like, again, the way that you articulate things is very valuable and would benefit just hearing it from your mouth.
Love that, man. And dude, Caleb, I think you and I think the same way. This is why I had the and asset domain way back in the day.
Well,
right?
We think the same way, or I just learned from really smart people. How's that? You're a few years older than me, so
I read your book and I was like, dude, this guy gets it, man. He gets it. Because look, at the end of the day, I don't know of a better marriage. I really don't. Now, it requires an active mind to make this work, but I do not know of a better marriage of whole life cash value insurance and simple turnkey real estate. I don't know of a better marriage. And so here's the way I think about it. Wealth is a function of time. And I see this all the time in the world of real estate investors, all the time. Just like we just talked about with business owners, they just keep rolling cash, thinking it's going to work. And before they know it, they don't have anything to show for it. All of their equity, all of their profits have been rolled into the next deal. And when interest rates change, when some little variable changes, things fall apart and collapse. And so the way we build our strategy is, look, you're going to make money, you're going to keep it. We're going to build up cash value, and we're going to store all of our reserves for our business, for our personal life, for our real estate portfolio. We're going to store it all in there. Then in addition to that, we're going to leverage the value of our policy. And this is what gets all these infinite bankers in trouble, right? Because when you're an infinite banker, you're the borrower. And what does a borrower think? Give me money, right? But you're also the bank. No one wants to be the bank because the bank says, give me my money back, right? But you're both the same person with the same account, the bank and the borrower. And so the way we do this is we leverage our vault, leverage our policy to buy in a real estate, a property. But in the world of investing, we're not profitable until we get all of our money back. Mm-hmm. So we take the profits, we recover that line of credit, right? Pay that line of credit off. And that might take you months. Hey, welcome to the world of financial freedom. Like, nothing is fast. It's not overnight. There's no such thing as get rich quick. So that might take you months or years. But the second time you do it, right, your policy is paid off. You then take a policy loan, you buy another asset. The first asset's generating a profit. The second asset's generating a profit. What happens? Well, that process goes twice as fast, then 3 times as fast, then 4. You're building momentum with every step that you take. But here's the cool thing that's happening. You're building wealth. And wealth, remember, is not what you invest. It's not what you make. It's what you keep, right? And so as you're restoring all of the profits inside of your policy and paying that thing off over and over and over again, you're building up a big old bank of cash and a big old bank of assets. And one of the coolest things about owning real estate is I truly believe in the world that we live in today. We've always lived in this world. It's just more acutely felt right now. We live in an inflationary world. And when Robert Kiyosaki says savers are losers, that's legit, man. You can see it right now. The value of our dollar is getting decimated and destroyed. And I don't care what the sorry, dude, I'm get crazy on this, but I don't care what the White House says. Inflation's not 3%. Like, just look at the last 25 years. The M2 money supply, the money injected into the world, has been on average 8%. If you look from all the way back from Bush to Biden, or Bush to Obama to Trump to Biden, 8% per year new monetary supply on average over a 25-year period of time. So your dollars are getting devalued by 8% per year. But guess what's happening when I own real estate? Oh, guess what? It's going up with inflation. It's a hedge against inflation. I've aligned my money with economic forces. So anyway, long story short, when you're ready to take income from your policy or from your portfolio, one of the best ways to do it is real estate. It's not a flat line. It's not straight, right? There's some months where things are killing it. There's some months where, hey, man, had some make readies, had some volatility. It cost me some money. And imagine retiring on a real estate portfolio. It's very difficult. Good months, bad months, but it's hard to plan a life, right? But if you have a policy with a bunch of cash value in it, so let's say you've got $500,000 of cash value, the way we think about it is it's a reservoir. And here in Utah, when Utah was first founded, there was a couple thousand people here, had a bunch of snow, but all the snow ran off the mountains, into the rivers and down to the lakes and eventually to the ocean. But when the early settlers came to Utah, they built reservoirs. And what does a reservoir do? It captures all of the rainfall, all of the snowfall, all of the melt off, and it holds it. Today, Utah supports hundreds of thousands, millions of people, but it's the exact same precipitation that we get.
Yep.
And it's the reservoir that accommodates the even distribution of water throughout the season. Your policy does the same thing. So if this year I have a bunch of value in my portfolio, I have a bunch of equity in my portfolio, but interest rates are crazy high and I don't want to do a cash out refi, I just take the income from my policy. No big deal, all tax free, all private, don't report it, live my lifestyle. Next year, maybe my portfolio, maybe interest rates are still high because the Fed hasn't got it under control yet. And so I don't take a cash out refi. I don't take equity from my portfolio. I don't take cash flow. I just kind of roll it all back into the system. And I take the income from my policy yet again. But then in year 3, when things are in a better situation, I might go back to my portfolio, pull the hundreds of thousands of dollars of equity that's there, realize my profit instead of keeping it on a balance sheet controlled by the bank, realize it, replenish my reservoir in my policy, and boom, repeat the process. So we combine cash value with real estate together to both grow a portfolio and to fund an adequate form of passive income as an element of financial freedom.
One thing that you said probably on a video 4 or 5 years ago, you liked real estate because of potential appreciation, cash flow, the tax benefits, and then there's one other one, leverage. And as an asset class, that was like boom, because there's other asset classes out there. But even in business is hard to necessarily get a bank to leverage. Like they don't like giving money for your speculative investment idea, but they'll they have certain tools and products all day long as it relates to real estate. And so that's what makes it a good asset class. And I don't know if you have anything else that you want to say on that.
Yeah, I mean, imagine this, dude. Everyone's chasing a good rate of return, right? I mean, They think that's what they need to get free. But here's what I've found. I mean, if you buy a good property, here's the way I think about it. There's so many different ways to think about real estate. I'm trying to solve a problem that is always in demand. And if you think about Maslow hierarchy of needs, what does everyone need at the base of that pyramid? Well, they need a place to live.
Yep.
So if I can find single family homes in a good neighborhood, already inherently I have an element of expertise. I know what a good neighborhood looks like, right? Everyone does. If I can buy that house and just sit on it, here's what happens. If I let's say the house is $100,000 and I'm going to come out of pocket and I'm going to buy that house for $100,000. If it appreciates this year by 5%, which on average, the compound annual growth rate of real estate for the last 50 years has been 5%, some areas higher, some areas lower. But if it appreciates by 5%, what happened? I earned a 5% return. And that's where most people will point at real estate and say, hey, it's no big, that's not going to help you. But if all I did was put a 20% down payment on that property, it still appreciates by 5%. So 100,000 to 105, my rate of return just jumped to 27. Right? So leverage is the real force multiplier inside of investing in real estate. And here's the other crazy thing. You have a guaranteed return in real estate. Because most people don't know that. But the guaranteed return is every single month, someone's paying the mortgage. And what is that doing? That's amortizing the debt.
Yeah.
And that's forcing a rate of return it's guaranteed.
Yeah.
So you have a guaranteed element in real estate. You have upside appreciation in real estate. You're aligned with inflation. Now, and
Yep.
this sucks, dude, but inflation isn't working against you like it is for most people. It's working for you.
Yep.
You're getting wealthy because you bought a house and sat on it.
Yep. Let me play devil's advocate with you on this. So we talk about guarantee. Yeah, it's guaranteed as long as you have a renter.
Bingo.
And what we'll do part 2, and we'll just watch TikTok videos of people selling high ticket courses on Airbnb stuff and all. And again, like I have people that are, they read Robert Kiyosaki's book, Rich Dad, Poor Dad, and they go invest in real estate, and they're looking at this and going, what the bleep is going on? Like, what happened kind of deal? Because again, their identity wasn't an investor. It's not that real estate was the problem. They were the problem. But you obviously have a process and you teach people, and there's a lot going on. But do you like real estate also? It's like, what are the potential pitfalls to avoid? And what are some of the things to be careful of? Because it's all great when things are going well. Leverage itself is an amplifier, but it can work against you if it just enhances and amplifies your decision. And if you're playing a guitar and you're horrible at playing the guitar and you put an amplifier into that, you're going to get exposed more. So
It gets nasty.
Yeah.
Fast.
So what are your thoughts on that? Because it's like, again, I'm agreeing with you, but I also like, there's so many people that are like selling courses. It's like anyone helpful on TikTok, of course, they're going to sell a course on the back end. And so there's like this like negative energy sometimes that comes with like that do real estate. And it's like, okay, but I also know a ton of people that did real estate and they seem to got the short end of the stick.
Cool. I'm going to give you 2 frameworks on that. Okay. So number 1, when you're buying real estate, there's 3 things that you have to ensure if you want it to always, and I'm going to underline that, always be successful. Okay. So number 1, you have to buy an real asset that has real value and is demanded over the long run. Right now, there is a major issue. Now, I don't know if anyone could have foresaw this, but there's a major issue in commercial real estate. Yep. There are cities right now with a 50% vacancy rate in commercial real estate. Yep. I was reading an article the other day that 300 banks are getting downgraded because of the commercial real estate balance that they have on their books. This is going to be a domino that's going to tip. So what's the difference between commercial real estate and losing your lunch and another type of real estate? Well, it is a real asset. It does have real value, but as we can see right now, it's not always really in demand.
Yep.
Right? The demand for that is not always constant. And so for me, it is the boringest thing in the entire world, dude. It is so boring. Everyone comes into my world and they're like, hey, I'll buy a couple of these, but when do I get to upgrade? When do I get to go fast? When do I get to buy commercial real estate? You need to buy 20 single family homes, period. That's it. Real asset, real value, always in demand. Real asset, real value, always in demand. Everyone, Maslow hierarchy of needs, everyone needs a place to live.
Yep.
So that solves the type of real estate we're buying. And dude, it is the most boring real estate ever, but it's hiding in plain sight. It's in the most demand. It has the most appreciation. It's the easiest to develop expertise for. And my friends, it's the easiest to turn key, which is key inside of real estate.
Yep.
Financial freedom is measured with cash flow, but it's experienced with time.
Yep.
If you don't have both of those things together, you're not free. So now let's talk about the failure side of things. What if you could go into the game, like Caleb, what if you went into any game and you knew the exact ways you could fail?
I love it. That's speaking my language.
It would give you a way higher probability of winning. Like the way you win is know how you're
I want to know
fail,
all
right?
the negatives. I want to know all the negatives. Anything. It's just part of my personality, but I'm more optimistic because I'm realistic,
What if in real estate, there were only 2 ways you could fail? And what if you knew about them before you went into it? And I'm going to give you way number 1. Way number 1 is what you already kind of mentioned. You're going to get knocked out of the game. And dude, this almost happened to me. And this is what destroys most real estate investors. They over leverage. They forget rule number 2, make and keep money. They don't have reserves. Dude, the permission slip for you to be a real estate investor and to use leverage is massive amounts of liquidity. You need to deal with all of the uncertainty that is going to come up. COVID, like that was a red herring. That was a black swan event, but not really. That particular one was, but there's been black swan events all through the history of time, and it affects people who over leverage.
Yep.
So what that means is the only way you're going to fail, reason number 1, is you get knocked out of the game. The leverage comes due and you can't pay the bill. So number one, you have to have massive, massive, massive liquidity. And that is your permission slip to invest with leverage. So for me, dude, I keep years of liquidity. Like right now, if all of my properties went vacant, if I had make readies on all of them, I could fund my portfolio for 3 years straight without any money coming in and money going out the door. So that right there, that's another reason to use high cash value life insurance.
And just, I want to point this out and agree to disagree with me, but like you're more like Dave Ramsey than we might want to admit. Is like, and I realize myself, it's like I'm like picking apart some of his stuff, but it's like I've actually never purchased something using leverage, including my primary residence, with something I couldn't of pay. You know how crazy conservative that is, but it's like that's why we get along so well, because it's like you literally just said you're doing all these things, but you have 3 years of, some people call it emergency funds. Like that's crazy, but it allows you to use leverage as a tool and not like be all in on leverage, where I think that's the big mistake people make, is they're like, the moment they can use leverage, they're doing it. And it's because their worksheet says this is going to happen, but they have nothing stopping them. And they have so much anxiety because if something happens, or if the Fed changes something, or if a politician changes something, like they're done. And like, what a horrible way to live your life.
Yeah, man. Dude, I read a book. I think it was Psychology of Money or something like that. Great. It was so good.
Return on zero. I love the concept of the savings account. Yeah, continue.
Do you remember in that book when he did the case study on Warren Buffett?
Yes.
So in that book, he lines up that Warren Buffett's been investing since like the age of 15. And at the age of like 85, so almost a century he'd been investing, but 97 or 90, I can't remember the exact numbers, but like the vast majority of his wealth was created in the last 10 years of his life. Why? Well, it's the function of time. Yep. Right? Wealth is never, there is no, like, unless it's a massive anomaly where everything coincides all at the same time, wealth is a function of time. And the only way you experience time is if you can stay in the game.
Yep.
Right? So don't get knocked out of the game. And by default, you're going to be wealthy. That's really the way I look at it.
Love it.
Is my permission slip to be wealthy is liquidity.
Yep. Love it. I love it. And I have a follow-up question, but like, I want to go to number 2, because have massive liquidity.
2. Okay. So dude, and this is the hardest one and this is why I love, and I'm going to brag for a minute, I love what we've created. Number 2, you quit. If wealth is a function of time, and if financial freedom is what you like, anything you want, anything that is of value, it's not free.
Yeah.
Freedom is not given, freedom is earned.
Yeah.
And my friends, there's this whole concept, that the archetype of the hero's journey. And in order for you to become the hero, in order for you to become and adopt this new identity, you have to go through the abyss, not once, but multiple times.
Yeah.
And in the abyss, you're going to find out if you were interested in whatever you said you wanted, whatever your call to adventure was, or if you were committed to it. And most people get to the hard parts and like, it's too hard. I heard Bitcoin sounds good. Let's go there. Yeah. Bitcoin's not happening fast enough. I hear, whatever, multifamily, or I hear online businesses, and they just jump from thing to thing to thing to thing to thing. So the only 2 ways you're going to fail, Caleb, is number 1, you get knocked out of the game. So liquidity is the key to that. And number 2, you quit. And this is why I believe so much in identity and community. I can't tell you how many times I've had to cry on someone's shoulder saying, I can't do it. It's too hard. I can't manage real estate. I don't want to do it anymore. And someone comes back to me and they said, hey, I'm just going to remind you what you said you want.
Yep.
Do you remember the documentary with Jordan? Dude, it was so crazy. When Jordan was talking about the championships teams that he created, there was a point in that documentary where he got emotional. And the reason that he got emotional is he would call out his teammates because he loved them, and he reminded them what they said they wanted. They wanted to be champions. And Jordan constantly reminded them what it took to become a champion.
It's good.
And that's hard. It's hard to be a friend that will hold someone else accountable in the hardest times, to say, keep going. So you get knocked out or you quit. Those are the
So follow-up question on that. If someone's just getting started, because it would be like, well, it's easy for you to say, Caleb. It's easy for you to say, Ryan. Someone's just getting started. They're super, super pumped. They don't have anything saved. Do you have like a build up an emergency reserve before you start real estate? How do you get started? Because it's like, what I find is usually people at our level, and I say this, if you're listening to this, I'm using quotations because Ryan and I are not like above anybody, but like we've been around a couple of years, and it's like we definitely like saving. But like I find that the people that are like not here, they will like want to get there quick, and they're willing to cut a corner. And it's really frustrating for them to hear like, oh, you're telling me I need to build an emergency fund before I do X, Y, and Z. Wondering if you have a way of helping those people or a framework, because my framework is build your reserve, and then the overflow of that is opportunity fund, which I, borrowed from Kim Butler, and that concept of emergency opportunity. But like building the emergency may or may not be fun, but I find that it's like the ultimate insurance policy to show up powerfully. Not sure if you have different ways of thinking, but I'm just curious.
Dude, I just if there's a shortcut, I don't know it. I
Yeah.
really don't.
Yeah.
Financial freedom in 10 years or less is the shortcut. What I've found more than anything, and it kind of goes back to how we started this concept, what got me going is being a better producer.
Yeah, I agree.
Like if I didn't have enough money to invest,
Yep.
and people think real estate's going to solve their problem. It's not going to solve their problem. Like you have to become an investor to manage it, but real estate is not going to put money in your pocket overnight. It's not going to make you, it's a 10-year game, dude.
Yep.
So if you're slow on getting going, the fastest way to get going, increase your income and decrease your expenses.
Go on. Sorry. Go on.
Yeah, that's what it is. Create a bigger margin between income and expenses. Therefore, you have more resources to get going.
This is really, really fresh for me because I'm doing more writing on a future book project that I'm working on. And we talked about, let's go. Yeah. And it's this concept of, invest in active income versus an investment. So if you had $10,000 and you put it in a fund that earned 8%, it's $800 at the end of the year. It's 8%. If you figure out your hourly rate and increase your hourly rate by only $5, okay, this can be doable, especially if you're looking at you have that same $10,000. It's like I'm going to take the same $10,000 and figure out how I'm going to provide $5 more an hour more valuable. Lots of different ways that we could go into that. If you work an average of 2,000 hours, that's over 100% return. Now, the only reason you will get to a point, and I write this, is I wouldn't put $100,000 to make that's a 6% rate of return. So it's like there's a give and go, but usually if you find yourself in a place, usually it's maybe less about the real estate and get the mirror out and say, okay, and I say that out of love because I find so many people, especially in the finance community, they're like, Roth IRA, like what should I do with my $2,000? Should I put it in a Roth? And I'm like, I again don't want to have this come across bad, but it's like if we're talking about what you should be doing with $2,000, like we have the wrong conversation. Like you're asking the wrong question. And again, this interview is going to be long because I just love talking to you so much. But like thoughts on that, because I feel like we're there. It's just that gives you permission to go back on yourself, because what you find is when you're really optimizing and maximizing yourself, you have a first world problem of what can I do with my money? Because you get to a place where it doesn't make sense to invest in another mastermind or another person or whatnot. Like you would actually be better off putting your money in other places, hence where the real estate or other assets come, but where, using leverage, appreciation, cash flow, and I'm always forgetting the last one. Cash flow, appreciation, leverage, tax advantages.
And tax advantage.
And like, boom, like that's where that asset becomes really, really great, but don't elevate it more than yourself. And we don't you just have to be really self-aware and where you're at, hence the get really clear about your identity, which that's where we started this whole thing.
Man, I think it just comes back to that. We have a little manifesto inside of our community and it has nothing to do with real estate.
Yeah.
And everyone thinks we're the real estate people. Real estate is the back end, how you grow the wealth that you've created, but it's called the producer revolution. The producer revolution is, look, your best investment is exactly what you doubled down on in the beginning, Caleb. It's you.
Yep.
It's wake up, exercise your talents. Here's the other thing I find too, man. It's hard to go introspective. And it's the exact same challenge that most people face on the investment side, they face on their income side.
Yep.
They don't have enough discipline to develop a sense of expertise for long enough that they develop mastery. They dabble. They jump from career to career, from skill set to skill set, and they never develop mastery. Master something.
Yeah.
When you master something, the ease at which you can earn money goes through the roof. But what does it require? It requires discipline and time. It's not easy and it's not fast. But everyone wants to point at the people who are successful and say they were lucky, they were blessed, they were whatever. They were just disciplined, and everyone is missing the process that led to the outcome. Everyone's pointing at the outcome, but they're missing the process. So, man, the producer revolution is exactly what you mentioned. Invest in your mindsets, your skill sets, and your network. That's how you make money faster than anything.
We talk about life insurance, and you talk about that as a reservoir. You talk about that as a place where you save money, emergency opportunity, invest in real estate, and then just how that it becomes like a perfect financial marriage. Not financial advice, not investment advice. Don't sue Ryan or I. We're just talking on a podcast. We don't know anything. But
No idea what
but if I double click that and I say you could do the same thing with the savings account, and in fact, right now as we speak, high yield savings accounts get a good yield. How does Ryan talk about the difference between whole life insurance that's properly designed and used versus other like accounts? Because in the short term, you're actually better off from a liquidity standpoint on a high yield savings account. In about 5 years, you're ahead in the life insurance if we're just looking at the cash and it never looks back. But like we're devaluing life insurance as an asset if we just look at the IRR. How do you articulate that, and what kind of things do you highlight? Because I can't think of a better asset that literally when I put $1 in, it like gives my dollar 10 jobs, including protecting my family, which creates a foundational asset. And sometimes I'm like, why can't people get this? And it's a reflection of my inability to communicate. But I'm like, if people understood this, Ryan, whether you're an employee, entrepreneur, or investor, you would want this at the center of your life.
Totally. Dude, I think it comes down to two things. Number one, it comes down to people's inability to think long-term. We've lost that ability as a human culture, right? Our attention, like goldfish are beating us now. Goldfish have longer attention spans than we do, right? And I'm a victim of that too, right? I'm constantly, my attention's being diverted all over the place. But anytime someone sits down and thinks 5, 10, 15, 20, 30 years generationally into the future, no one is ever thinking about keeping money in a bank account. No one. And so when we get, nitpicky on the minutia of what's better today and what's better over the next 30 days, that means we have very short-term thinking, and it's likely you'll never build wealth. So in the concept of wealth, we have to take a step back and expand our time horizon. Over a long enough time horizon, for sure, insurance squashes a bank account 100 times over. So that's really number one and people that won't think long-term, they're not going to be good stewards over a life insurance policy because, again, just like in real estate, they're going to get knocked out of the game or they're going to quit. They don't have the discipline to ride it out to make it truly what it can be. So that's number one. Number two, Caleb, you've been doing this now for years.
6 years, 6+ years.
Dude, I just hit 12 and it's crazy, dude. And these last 4 years, my mindset has just been massively expanded with the breadth and the importance of the work that we do. I shared this at your event last year. I've had four of my clients pass away now, 4 of them. And every single one of them were unexpected. Every single one of them were premature. Now, I don't know if you ever die right on time or die in an expected way. But man, the last couple of years as I've been sitting down with the spouses of these, people who have passed away, guess what? We didn't talk about the cash value. We didn't talk about the real estate portfolio. We didn't talk about the investment criteria. We talked about the death benefit. And in that moment, it was the only thing that mattered. And I'll never forget the last one that passed away on me. He was diagnosed. Dude, I had to wrestle this dude. And it was crazy. He wanted to invest in real estate. He's like, dude, skip the life insurance. I'll come back and do the life insurance. Let's do the real estate first. I'm like, dude, I'm not working with you. Like, unless you're going to follow the system, I'm not working with you. It's just, I'm not. This is not a la carte. This is not pick and choose. This is financial freedom in 10 years or less. And so I forced him to do the life insurance, and it was crazy. He did not want to do it, but he did the life insurance. And over the next 4 years that we worked together, that was the only thing he did, right? Life got busy. His business got insane, and he never had time to revisit the real estate. And over the next 4 years, he kept putting money into the life insurance, kept, intending to revisit his game plan, buy the real estate, do all the things. But after 4 years, he gave me a call one day, and I'll never forget that day. And on that day, he said, hey, Ryan, remember the vault, because that's what we call a life insurance policy. Remember the vault that we set up. Remind me about the death benefits. And so we walked back through the most important part of the entire thing that we set up that is the most under considered in the moment, because of course we're all superheroes and we're going to live forever. Yeah. And over the next year, as he had a brain tumor the size of a tangerine. It was removed from his head and he died a year later. And dude, he literally sent me a text message the night before he died. And I mean, we communicated the whole time, the whole year he was fighting. I would sit down with him and his wife. We mapped out their financial plan, with the death benefit being the number one asset that was left behind, because he had enough foresight to protect his family when they needed it the most, even though he didn't know it. And he sent me a text message right before he died, and just, I mean, it was so hard to get that text message because I was an answer to his prayer. And I'm so grateful for that, because the only thing I did is hold strong to what I know is right and know is true. And I could have helped him do real estate, and he could have had an adrenaline rush of getting a little bit higher return in the short run, but he never would have created wealth. And man, that dude, like, that was a confirmation to me. And I've been on a warpath. Like, I have come back harder than ever on the value of life insurance. And if you don't do life insurance as part of this, you'll never be wealthy. I don't care if you have more money in your bank account. I don't care what your rate of return is. You will never build wealth. And so, dude, there's no other way around it for me. And I do get accused. I 100% know that this is my personality. I am very focused on what it is I do and how I do it. And there's not a lot of people that want to step in that laser focused type of mentality, but those who will, I promise you, you will experience all forms of wealth, abundance, finance, mentally, emotionally, legacy, everything that comes with life insurance at the foundation.
Ryan, I'm going to end it here. There's nothing I can add to, nothing I can add. Thank you for sharing that story. I think it's there's people we fight with every day, it seems like, and it really comes down to, they just put a D value on ensuring their greatest asset. And I've only delivered one death claim in my short time being in the business, and that conviction increases like a rocket ship, because we realize that we're all going to die, and life insurance is just one of those things that we can, think with the end in mind. And yeah, I forget who said this, but it's like you're going to build these amazing things, but if you didn't, and you have this set up properly, you can quite frankly just ensure that value in the form of cash, which is just one form of value, influence, fulfillment. But it's something that can be really powerful if we're going to have the audacity to say that we're going to be wealthy and build wealth for our families. And so thank you for showing up. Thank you for jamming. I'm fired up for where you're going. I'm grateful for you as a friend. I'm hoping my audience will go subscribe to your YouTube channel. Is it Wealth Outside of Wall Street?
Yes, sir.
We'll
Appreciate
have
you, my
that.
man.
We'll have that in below. We might even have that in the title. And then if there's any other resources that you have, we'll have that down below as well. Ryan, is there any final thoughts or words that you have as we wrap this up?
So anyone that's listening on your channel and following Caleb, man, you are in the right spot. If there's, when I say your best investment is mindset, skill set, and network, man, I cannot imagine a better place to be than this place right here. The And One Asset community. Caleb, what you've built is phenomenal. You're teaching people to think like producers, to be intentional. I love, love, love that you've built that word intention. That is the purpose of life. We get one shot at this thing, my friends. Live it up, live it big, and be intentional.
Hey, if you enjoyed this conversation that I had with Ryan and want to see the entire episode, we're going to be releasing it soon. The link is down below, and depending on when you're watching it, it might be live right now.